Hello, everybody. Welcome to the webinar. My name's Troy. I'm a Senior Account Manager with AvaTrade. I'll be leading the Fundamental Analysis webinar today. As we get going, let me just do a quick systems check. Some of you have already responded, but just type OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, great. I've got enough responses. Thank you. So an interesting day. It's earnings season. For those of you who don't know what that means, some of the big banks and companies are starting to report their fourth quarter earnings. So we'll take a look at how to know when those are reported from our website, and then also how to look up the numbers when they do come out, and how to know whether it's pre-market, after-market, during market, that sort of thing. And so there are some that came out already that are coming out today, coming out tomorrow. We'll look at the charts. We'll talk about how you can time things up based on what you think might happen or what already happened. I think it might be something new for many people to trade based on earnings reports on stocks that are available on our platform. But it's one of the strengths of our company here at AvaTrade is the number of stocks that you can trade on it, and also the indices that those stocks are found in makes sense, will react as well. So the major US indices will take a look at some US companies and in terms of the stocks, and maybe if we have time, we'll look at the indices as well that go along with those stocks. So as we move forward, as always, keep in mind, all investments have risk. That includes whether you're investing in real estate or anything else, trading Forex, CFDs, spread betting, options, all have their level of risk. No one move is guaranteed to profit. Obviously, we're here because there are large potential profits that we can go after. You just have to figure out the right way to go about it for your own tolerance of risk, and to find entry points that make sense using the correct information to hopefully be one of those 30% or so of traders that trade with us that find long-term success. You can see the percentage there on this disclaimer, I guess we could call it. Most people don't win long-term, but I think it's pretty good that almost a third of traders can actually profit long-term and really make a go of it from a professional perspective or standpoint to be profitable long-term. And those of you that attend the webinars and take it seriously to learn, there's no reason why you can't be that part of that 30% or so, or 29%, and there's no reason why that can't grow for AvaTrade and become a larger percentage of traders that are really taking things seriously and learning how to build proper strategies and hopefully profiting long-term. And because AvaTrade is a hedging broker, we're not betting against our clients. We're not hoping they lose. The more that can trade long-term and profit long-term, the better, because the business model is profiting off the small spreads and swaps overnight. And the longer we can keep clients and have them growing their accounts, the better. Okay, so the full risk disclosure statement is found on avatrade.com. You're welcome to read through it. Keep in mind that what we cover is meant to be from an educational perspective, is not meant to be taken as financial advisement. Okay. All right. So as we go forward with the fundamental news, keep in mind there are a couple different types of fundamental information. Today we're going to be looking at the first type that's listed here: regular economic events, things that are scheduled, that we know in advance what they'll be, when they'll be. Earnings numbers fall in that category. Okay, it's a type of fundamental news that you can count on knowing when it'll be, and what the topic is, and what the scope will be, and you can prepare for it in advance in terms of the timing in that. The other type of fundamental news: extraordinary economic events. Anything that comes out that's unexpected, right? Saudi oil facilities being bombed by whoever was involved with that back a month or two back. Conflict between US and Iran when a general is killed by a missile strike. Anything like this. Those are extraordinary events that you just can't predict what they'll be or when they'll be. And those you can prepare for as well. We've gone over that in the past, but today we're going to focus on these earnings reports and how you can find them and utilize them, and maybe diversify a bit if you haven't been trading on stocks at all. It's a very interesting thing to trade on, and the information is very much useful. So first, let's go. I want to take you to our website and show you a couple things in terms of what our website offers in terms of information for these earnings releases. So on our website, if you go to trading info, you'll see here earnings releases are listed. And so we can very easily click on the earnings releases, and they're listed alphabetically. I think it would have made more sense to list them by date. You know, the ones that are closest and then furthest away, but it's okay. We can quickly go through. The list isn't that long. Okay, we see a large number of stocks, but it doesn't take long to scroll through. We've got, you know, American Express tomorrow, earnings numbers. We've got, and actually I looked that one up and the date is changed to the 20th. Sometimes that happens. Let's take a look some of these others. I know I scoped out Bank of America. That date is correct. We've got on the 15th reporting. We can take a look at what else. Let's look at the banks here. Citigroup, that today. And we've got coming up a little bit here, Goldman Sachs reporting tomorrow. We'll take a look at that. JPMorgan reporting today. We'll take a look at that. And I think that'll fill our time. So maybe those four we'll take a look at. Now, there's an article that came out already about JPMorgan. They already reported their numbers pre-market. Okay, and so that means before the U.S. market opens, they've already reported their numbers. Okay, type OK if you all are hearing me still. I have someone saying they're not hearing me at all. I think it's probably just that one person, but all right, thank you. I'll let Patty know it's just her. Patty, it is just you. Okay, so all right, so JPMorgan Q4 earnings blow past expectations. Okay, driven by strong consumer sentiment and consumer purchasing, and also the markets have just been on a tear, right? Things have been going very bullish for quite some time. Companies are expanding, taking loans, feeling confident, all of those things. And so that helps JPMorgan as well as some of these other financial institutions do well. Okay, so that's what we're seeing. Now, if we're on, there are multiple platforms you can use to look at earnings numbers and to see when the dates are. This is just one of many options. So when we're on investing.com, you see at the top here from the main page, earnings calendar. So very simple. We can click on it, and we'll just go in order with the ones we saw listed here. First, since JPMorgan already reported, let's do that first. And so we go to the earnings calendar, then we click down it at the top and we click on filters. Okay, when I click filter, I can type in the company I want. So JP, and I don't even need to type anything more. It gives me the selection that starts JPMorgan Chase and Company. Okay, so we click on that and we see, okay, so JPMorgan will report prior to, and so when we're seeing JPMorgan fourth quarter earnings blow past expectations and strong consumer sentiment, we're looking here. The numbers are not actually officially out on the platform, but we're seeing articles about what it will be pre-market when these numbers come out. Okay. I've got another person saying no audio. 1 second. Okay, so this is where we'd look to see the numbers come in, and then if we look at the chart and we bring it up here, let's go to my demo account and let's find JPMorgan. You'll see the market's not open yet on JPMorgan. Okay, it was climbing at the close of the market yesterday. Okay, and you might say, well, when's the market open for these stocks? And so before we devise maybe a strategy for some of these, we can look here, and besides the earnings dates and times being listed on our platform. We can also go to trading info. And then once we're in trading info, click on trading conditions. And we can search. So JP, here's JPMorgan. And once we click on that on the website, it gives you all the information you need to know. Here's the trading hours. Okay, the market opens at 2:30 p.m. GMT time. Okay, so the markets will open soon. And since they're already reporting that these numbers blew past expectations, what do you expect to see happen when the markets open? When this chart starts ticking for the 14th at 2:30 p.m. GMT time? Yeah, Alex says go up. Okay, it's very possible it could go up, right? Sounds like people are excited from the headlines about the numbers. As those numbers as we get closer to market open, those numbers are listed on the various platforms, you could expect maybe some positive momentum. Maybe you'll see it gap. Okay, maybe you'll see the price gap up, and let's go to 30-minute candles. You see these gaps from time to time, from one day to the next. It happens. And many times you see here the market gapped up and it kept climbing with the momentum, right? And that happens many times when there's a gap in a certain direction. Here it gapped down from here to here. It tried to climb, it filled the gap, and then dropped in the direction of the gap. Many times this happens. And so you can start to think about, okay, in the history, many times the direction of the gap determines the eventual direction, not always, but sometimes. And so you can watch this as the market opens. See if it gaps in the direction you expect, if it gaps at all. See if maybe there's a pullback, right? If it starts to fill that gap, and maybe you find an opportunistic entry point to go in the direction of what you think the momentum should be. If it gaps and then fills the gap as it did in some of those areas I was just showing you on the chart, if the price skips a certain amount and then pulls back to fill that gap from the open, and then you say, wow, that's an opportunistic entry point if the numbers were really good to maybe buy in that example, if it gapped up and then filled the gap back down. Okay, sometimes you're patient, you wait. Now, if it gaps up and then starts breaking to a new high right away, that's maybe a breakthrough, and that's a sign that, okay, it's not going to pull back and fill the gap. The momentum is maybe that strong, and you can make a decision on what to do there as well. Okay, so, but at this point, it's too late to open a position now before the market opens. You'd have had to do that before the market closed yesterday. Okay, keep in mind these stocks open and close with the U.S. market, these U.S. stocks each day. It's not like FX that runs 24 hours a day, basically, other than the short shutdown period each night. So the stocks, you got to think about your plan the day before sometimes. If you expected, wow, the markets have been bullish, I think these banks will have good numbers, and you opened a position before the market closed yesterday, then you see these headlines about, hey, blowing past expectations, you'd be excited for the market to open right now if you already had a buy position in, right? There's no reason why you can't anticipate that for some of these other stocks that haven't reported yet also. But you could play a strategy, wait for the market to open, see which way it responds. If there's a gap in the direction you expect, wait for an opportunistic pullback if that's a good idea for you, and then you make your move. Okay, so lots of potential here, and keep in mind they're only reporting these numbers quarterly. So if there's a lot of momentum, you start to look at 1-day candles, 1-week candles, and you say, wow, this could be a run that could last. This could even be a longer term type move. Okay, so that's something to think about as well. It's not all about scalping all the time. You also could look at longer term moves, or you could do both. Okay, some might be trading to fill the gap if it gaps up before they trade to buy in the other direction. Okay, so those are different ideas that you could do. Now, let's go ahead and let's take a look then at some of these other choices in our earnings listings for these banks. And so if we go trading info, earnings releases, and we take a look, let's scroll down a bit, and we see Bank of America, okay, reporting on the 15th, not today. So this one hasn't happened yet. Okay, the news hasn't leaked out yet. So let's go to the to investing.com first. Sorry, confusing myself. Go to the filters and let's filter for Bank of America. And there it is, Bank of America Corporation. And we see indeed it's listed that the earnings come out on the 15th. And you see this little sunshine here. It tells you before market open. Okay, and you see some you'll see a little moon, and when you point at it, it says after market closes. Two different things. Okay, and that changes the strategy of how you might approach it. And so possibly it's priced in, Alex, and that's maybe the benefit of waiting for the market open, seeing if it gaps, and then seeing if you want to play the fill the gap or wait and see if it does, and then go with the opportunistic entry point, because hindsight's 2020, right? And these movements aren't necessarily just going to make one jump and that's it, right? A lot of these stocks continue with momentum for weeks. Okay, so good point. But if it gaps, that tells you maybe the price wasn't cooked in all the way yet. Okay, so that's something you watch and you get a feel for. And we saw when we looked at the chart, when there were large gaps from one day to the next, that momentum many times carries on. Okay, or the gap fills, then it carries on. All right, so something to keep your eyes on. So this is for tomorrow at before market open. So if you wanted to make a move, let's say you had a feeling, wow, that JPMorgan did well. You're thinking, I think this is a trend. I think Bank of America will do well. If you want to get your trade in before this announcement, when do you have to place your trade? If you want to trade on Bank of America before their earnings numbers are released, yeah, today before the market closes, right? You'd have to trade today before the market closes if you want to get your trade in before the numbers start being reported on Bank of America, because they're going to be reported before the market opens tomorrow. Okay? Once the market closes today, you can't open, right? Now keep in mind, if the numbers go the opposite of what you think, you understand, if you open the trade today and let's say you do a buy because you think, momentum for the banks, you're going to buy on Bank of America now, banking that you think the numbers before the market open tomorrow will be positive and that Bank of America will jump like maybe JPMorgan does today if you watch it. Okay, let's say that if JPMorgan gaps up with what looks like good news, and you say, wow, that's a sign for the banks, and you put a move in on Bank of America to buy before the market closes, anticipating good numbers on Bank of America pre-market tomorrow, and the numbers come in bad. It could gap the opposite way, and even if you have a stop loss, some of you are saying put a stop loss on it. It could gap past your stop loss if the market opens further down because the numbers were maybe way worse than expected. You could lose past your stop loss. Okay, so keep that in mind. So take a trade size accordingly. Look at past gaps, past large movements, and see, okay, what's a reasonable amount for trade size? I know I'm taking a risk here by placing the trade before the market closes today, but you only do it with a trade size that's acceptable to you. And also, if you have a good feeling about what the numbers will be, if you're trying to do it before the numbers, okay? You could play it the other way, like with JPMorgan. Wait for the numbers to come out, wait for the market to open, see the direction. If it gaps, look at the size of the momentum, be patient, see if it fills the gap, or trade the fill of the gap if you like to do that. If it breaks to a new high past the gap, maybe that's your sign that, hey, uptrend is continuing, that sort of thing. It's okay to trade after the numbers come out and the movement occurs. If you have a strong feeling before the numbers, then you can try and guess the market, right? You can say, listen, I have enough feel from the indices have gone to new highs like crazy. Business has been doing well in the US. JPMorgan did well, and you have a great feeling about Bank of America, then go for it. Okay? Go for it then. But you have to feel good about it before you do it. Otherwise, wait for the numbers, then react. That's okay too. Yeah, listen, the indices and gold have been moving tremendously as well, Alex. I agree with you. All of this is related, by the way. If the banks are reporting good numbers, what do you think happens to gold? If the banks are reporting good numbers and you take a look at gold and you work a strategy on breakthroughs, gold might be breaking support levels, and so sell stops might make sense. The better you see, the more you see JP Morgan gap up, if that's what happens, maybe that clues you in to put sell stops on for gold. Some pending orders below support levels on the 1 hour candles or something, that as it breaks support, if that's going to happen, you can anticipate maybe that would happen with good economic news, that the safe haven gold might break support levels. Okay, so there are multiple things you can do with these earnings numbers, including trading on gold and the indices, probably in opposite directions, right? Indices probably go up with good reporting numbers from these big banks, and gold probably has pressure to drop. Okay, so you use this fundamental news to choose the direction you want to trade, then use your technical analysis for the entry points. So keep in mind, Bank of America, before market opens tomorrow, if you want to trade before the numbers, you have to do it today. Okay, I'm not telling you you should buy or sell on this, but you might get a feel based on JP Morgan today what the momentum might be with the banks. Okay, they all compete with each other, right? All right, so that's Bank of America. That's pre-market tomorrow. Opportunity maybe to get in today. Let's scroll down. Let's take a look at another. And we're looking at, how about let's take a look. Well, Berkshire is not until next month. Let's keep looking. Here, 14th, Citigroup. That's today, Citigroup. So let's take a look. When are they reporting? Pre-market, after-market today. Okay, Citigroup Incorporated. Here it is, and we see during the market. It doesn't have the moon, so it's not after market. It doesn't have the sun, so it's not before market open. So right after market open, sometime today, Citigroup should be reporting based on this schedule. Okay, usually the schedules are pretty accurate. On occasion, companies change. They'll change. Okay, we'll do it the next day. Sometimes the date changes, usually not last minute though. So usually you can count on these schedules. So should be sometime today after market opens, Citigroup will report. Okay, so if we go then and take a look at Citigroup, let's find them on the chart. And where is Citigroup? We'll find it. There it is. Okay, Citigroup. All right, so look, same as JP Morgan, it rushed up yesterday. Someone mentioned the price is cooked in, right? People are already anticipating good numbers today. That's probably why Citigroup went rushing up yesterday, right? Look at the rise. But can you still play the market today? What if before they report today, you see Citigroup come rushing back down somewhere down here near, let's say this support level here, resistance, it broke through here. What if it pulls back before the numbers come out to this support level and you feel like you think the banks are going to do well from last quarter when these numbers come out, but the numbers haven't been reported? Maybe you look for an opportunistic entry point to trade the direction that you think it'll go after the numbers come out, if the numbers haven't come out yet. If it doesn't move to an opportunistic spot for the direction you think it'll go, keep an eye. When the numbers come out, if you see a gap as the market opens, okay, then you wait for an opportunistic entry point to trade the direction that you think that momentum, that gap shows you. Okay. Yeah, certainly, Alex, different banks have different policies, different risks. So not every bank necessarily is going to match what JP Morgan did, right? And that's the benefit of sometimes waiting for the numbers, waiting to see what direction was the momentum, which way did it gap, if it gapped, to show you the direction of the sentiment of the momentum. Maybe you play the fill the gap strategy as long as it doesn't break to a new high after it levels off after the gap. You play it to fill the gap a certain distance, maybe half the gap, take a scalp profit on that. If it cooperates for you, if it breaks to a new high, maybe you're ready with a buy stop above the high after it levels off after the gap, if it gaps. So you got a couple ideas there. If let's say at market open or after they report their numbers, you get a gap. And then it levels off and you say, okay, I'll trade for it to refill that gap after it levels off, with your stop loss above where it consolidated after it gapped, if it gaps, right? So you can trade to fill the gap back down if it gaps, and above the high point, if it breaks to a new high, maybe that's your stop loss on the fill the gap strategy. Small risk for an easy potential scalp. If it breaks to a new high, you could already have a buy stop prepared, because if it gaps up and then it breaks to a new high after consolidating, maybe that convinces you that the momentum is still there. Okay, just some ideas, but it's got to be based on how you read the market after the numbers are reported, and if there's a large movement one way or another, or maybe even a gap. Okay, so huge opportunity for movement on Citigroup. Already has momentum. Keep in mind, U.S.-China trade deals expected to be signed this week. So people are feeling optimistic and bullish right now. The sentiment is obviously quite positive, especially looking at what the indices have been doing and how the market closed yesterday on these bank stocks. Okay, seems to be a lot of positive momentum on the markets. So if the numbers come out good, that maybe just gives you even more reason to go with what you might perceive as positive momentum. And you can see on the 4-hour candles, resistance level is way up here. It's got room to move still. If we go to 1-day candles, same thing, up here. All right, 1 week, we're seeing these banks have reached new highs. It's broken on the 1-week candles. The resistance from 2017 already has been broken. Okay, you see this here. Resistance, this goes back to 2017. The movement already broke above that yesterday. That's momentum. Breaking a 3-year high. Okay, breaking towards all-time highs, breaking this resistance that hadn't been approached for 3 years, already passed it. And now if positive numbers come out today, wow, maybe there's huge potential for movement there. Okay, and I'm not guaranteeing the numbers will be good. They could come out bad. Then there's huge potential for a pullback, right? Either way, you can be on top of it. Watch if there's a gap one way or another, and then play it with what makes sense, right? In the bigger picture. Huge opportunity with these earnings reports coming out. Okay, so let's go and see another one. Let's see what else is out there. What else is on the list? We see as we scroll down past Citigroup, then we've got, and so that's still going to occur today. And then we've got Goldman Sachs tomorrow. And let's see, is it pre-market, after-market? Let's check out Goldman Sachs. Talk about a nice stock to trade on. Okay, Goldman Sachs Group. And it's going to be before market opens tomorrow. So again, if you want to trade on Goldman Sachs, let's say you see a trend. Let's say not only JPMorgan numbers blew away the expectations. What if Bank of America, Citigroup, they all have positive momentum, and you start to feel like, there's a trend here. Maybe you think you can predict what Goldman Sachs will do. When do you have to trade if you want to trade before Goldman Sachs numbers come out? It tells you it's going to be reported before market open on the 15th. When would you have to trade to get a trade? And you say right now, today, before the market closes. After the market opens today, then you could trade anytime today before the market closes, and you'd have a position in prior to those numbers being reported pre-market tomorrow. Okay, I'm not saying that that's necessarily the plan you have to do. I'm saying if you want to trade before the numbers are reported, if you have a good feeling one way or another about it. Okay, if you don't have a good feeling about what the numbers will be, but you still want to trade on it, then you trade with hindsight. Wait for the numbers to come out. Wait for the market to open. See if it gaps, see if there's momentum, then play it the way that makes sense in the bigger picture. And then you can be patient with it. Exactly, Alex. Or wait and see the flow. If you like the trade on hindsight, that's okay. You also can do both. You can put a smaller position on the guess before the market closes today. You could wait. If you're right, great. If you're wrong, you can go with a bigger position after you see the actual numbers. That's okay as well. Remember, you could trade with a trade set. I talk about that a lot in the webinars. Trading with a trade set allows you to take a shot, but you're not all in on the first move necessarily. You have a plan in case that first shot goes bad, what your next step will be with hindsight, with actually seeing the numbers, whether you're going to trade a fill the gap strategy if it gapped, or go with the momentum if it breaks to a new high or a new low after the gap, that sort of thing. If there's no gap, then maybe you say, there's not enough momentum. The numbers weren't enough one way or another. I prefer not to trade on it. That's okay too, right? It's got lots of options there. There are lots of earnings coming out today, tomorrow, pre-market, after-market, during the market today with the Citigroup. So lots of things you can do. Pick one or two or three that you can have the time to focus on and work a good strategy once you either see the numbers or if you want to predict the numbers. Okay, and both is okay. All right. Any questions so far? Yeah, exactly. Some of you are asking, can you trade primarily on earnings? There are enough companies reporting and on our platform. Some traders trade only on earnings reports, and they have the strategies where they trade to fill the gap with a large gap, or to go with the direction of the gap if it breaks to a new high, these sorts of things, or a new low if it gaps down. And I have traders that do very well. There are earnings. I mean, let's take a look. Look at how many companies have earnings every month during each quarter. I mean, you see January, you see some in February, you see some in March reporting their numbers. They're all the way through the quarter, and then the next quarter starts, right? And so this is something where you could be trading on stocks a couple times each week with some pre-market moves after, I mean moves pre-numbers, and also secondary moves after the numbers come out. If you were wrong on the first move, you can have a whole setup. It's like a chess match. You don't have to be all in on that first move either. Okay, so certainly a workable strategy here with looking, is it pre-market, is it post-market, is it during the market, trading on some before the numbers, some after the numbers come out, having a ramp-up strategy with your trade size in case you were wrong on the first one, you take a shot at the second one, that sort of thing. Very workable strategy with this type of fundamental news. What's great about this type of fundamental news is you know that the topic, the timing, when these numbers are coming, you can watch the momentum, you can get in at you can be patient and get in at the right time that you deem the right spot technical analysis wise. It can work very well, especially for a patient trader. You can scalp with it, and you can also hold positions longer term. Okay. Any questions on that, on earnings in general, on trading on stocks? We've been going for a good 35 minutes, and this is really the tool I wanted to show you today. We'll maybe look at one more bank earnings timing, and maybe we'll look at the chart as well. Let's take a look. What's one more that's coming out? So as we looked at JPMorgan. Let's scroll down. We've got, what else? We could look at something other than banks as well. Now, HSBC, that's next month. Doesn't mean you can't prepare for it. We looked at Goldman Sachs. Later this month, ExxonMobil is reporting. That's a big one. Okay. Looks like we looked at the major banks that are coming up this month. We've got Deutsche Bank here at the end of January. Maybe we'll take a look at that. Let's see. We've got it listed as January 30th. Let's see if that matches up here in the filter. We'll keep the bank investment theme going. And so let's see here. DEUT. And we've got some different options here. Let's see. Let's make sure we have the right one. Sometimes it can they're all on the New York Stock Exchange, contingent, municipal. Let's make sure we have the right one. We'll be able to tell by looking at that's not the right one. try that one. And sometimes not every platform has the right entity listed. It's okay. We could check some others for Deutsche Bank if we can't find it here. We'll try one more. If it's not there, it's okay. This is real time. This is what happens when you're doing it as well, on occasion. Okay, so let's check another one. And obviously we could go to one of the other platforms. NASDAQ lists earnings. There are other platforms, and you could probably find Deutsche Bank listed. Let's see, ExxonMobil. I think that's a big one. A lot of people are trading on oil, and it's okay. We can get off the bank theme. There's ExxonMobil Corporation. Okay, and looks like they're listed beginning of February, so you have to keep an eye on the date. Check it. Could be end of January, beginning of February. As it gets closer, the date gets more certain. Listen, ExxonMobil is affected obviously by oil prices. As it gets closer to their reporting, you see what oil's doing, see what is the oil market bullish, bearish. Take a look at what's happening on the charts leading up, and you decide, do you want to trade on ExxonMobil before the numbers, after the numbers? You work a strategy. Maybe you're going to try both. If the first one wins, great. If not, you go with an after the numbers strategy. So you can see there's all kinds of earnings coming up. Coca-Cola, Citigroup, Chevron, Caterpillar, they're all there. They're all coming up this quarter. And if you need any help with it, with finding the earnings numbers when it gets closer to the time, just talk to your account managers. We all have experience with setting things up and making sure you got the right date for the earnings and you're looking at the right corporate entity, that sort of thing, so you don't get confused. Okay, great. Thank you, everybody, for joining. I'm glad it was informative for you, Norbert, and everybody else. I think you got a lot of opportunities today to get in on some of these banks, especially. I think there's going to be some huge movement. There's a lot of momentum out there in the market right now for big moves. So keep your eye on them. Maybe take your shots if you like it, either before the numbers, after the numbers, or both, which I tend to like to take more than one shot. Okay, thank you everybody for joining. Bye for now. We'll have another session going tomorrow. I think we'll be looking at cryptocurrencies tomorrow. Okay, all right, bye for now.